last year. We figured we would stick with the theme. Hopefully you guys are big fans of Queen. So we're gonna tell you more about DevCap. It's a company we launched about 2 years ago. It's an early stage AI investment company, so like VC but different. Trying to do VC better, and it's run by people who build AI. So we'll get into it, but first I kind of want to tell you the story of how we came about. So I've been friends with my partner Max for 20 years. We've known each other, since we were kids basically. And I went off and did a career in portfolio management. I was a buy-side PM for 12 years at 2 different funds. At the same time, Max went off, was a software engineer building really cool cutting-edge tech, built up a whole team beneath him, and had been doing AI and ML work for that whole time. So when ChatGPT came out, my first call was to Max. Hey, what is the deal? This is late 22. Is this real? Is this overhyped? And he's like, no, you don't understand what's been happening behind the scenes, what we've been building ourselves. This is going to be world-changing. This is going to be like the internet. And again, this is late 22. So after a series of conversations, I decided to quit my job at the hedge funds and go work with Max at his tech startup. My parents did not love that, but so far it's been okay. Luckily, AI has played out as we expected. And shortly after joining Max, I said, hey, we should be doing VC and we should do it different. And he said, why? And I said, because you guys actually know how this stuff works. You're builders, you're building it every single day. You will know exactly what to invest in and what to avoid because you see what's going on the cutting edge. So this is what we did. We launched DevCap. It's a different model. So we're going after a portfolio approach of building a diversified portfolio of pre-seed and seed stage AI companies from all around the world. We're geography agnostic. It's a simple structure, similar to the way Urbana is listed. We can actually list publicly, and it would be an investment management corp. There's no GPLP. There's no 2 and 20 model. Everyone who invested as us is shareholders. So what that means is all the capital we raised goes directly into the business, which means directly into the new investments we're making. There's no suction out of it. Some of the other publicly listed companies we'll talk about later, the effective MER is 5 or 6%. Ours is basically 0. And then finally, like I said, the technical diligence from real AI builders like Max and the team, that's our differentiator. So we'll go into a little bit. I think this slide is honestly a bit self-evident now. This is more why AI, why now? People had that question a year ago, 2 years ago. People are obviously getting it today. AI is going to be like the internet. I think a couple of years ago was similar to 1995. Today is similar to maybe 97, 98. It's still relatively early. The other thing is, why are we doing it our way? Well, it's strong deals in venture are hard to win. The best companies, the best founders that are starting to get traction, it's obvious to us, it's also obvious to other VCs. You need to really convince them to take your money when they're the best. They have choices. They could take money from us or another VC fund down the street. What we're trying to do is provide value-add advice. We can riff with them on their levels. We went for dinner with some of our founders last night, and the way Max and them were just brainstorming on ideas, that's the difference maker, and that's why they're choosing to take our money so we can invest in them early rather than other VCs who are more established.
Yeah, and I guess our big differentiator is that we are a team of engineers backing this, and we build things. And when Jordan, I guess our process really is Jordan goes out, schmoozes, makes introductions to people, and then finds companies. Sometimes I pass some companies on that I see. Then he'll decide, okay, does this look like a good investment on paper? And then if so, I'll talk to them and I'll say, hey, what are you building? How's it working? What does your team look like? And I'm able to kind of, I don't know, I've been doing consulting in R&D, specifically with startups for a decade. So I'm able to often help right off the bat. I'm often able to ask good questions. I'm often able to introduce them to somebody who's the world's expert in whatever thing is that they're working on right now. And so that gives us, that makes us really stand out, especially in Canada. I think there are fewer of investors like us in Canada. And so yeah, we win the deals because these people want to work with us. So Manatical is my R&D firm, and it's kind of the sister company. Manatical is a shareholder in DevCap. We also have some advisors who are specialists in, I guess, the stuff that Manatical is less specialist in. So Greg is a go-to-market master, and so he's able to bring that perspective. Max, not me, other Max, is a former Tories M&A lawyer who is a startup founder himself now, and so he's able to bring a legal analysis perspective. And Libby is a longtime friend of mine who led the JP Morgan blockchain division, and so she's able to bring a like fintech perspective. And so together we have a pretty broad coverage of the kinds of things that you need to understand to be able to help early stage companies. And really it's all about helping them, right? I think even more so than in later stages, it's really about the people and understanding the people and helping them grow, setting them up to succeed. We really are, rolling up our sleeves and trying to add value to the people that we invest in.
Yeah, the real differentiator here, I think, is the Monadical team of 20 engineers, software engineers. The advisors and directors, we chose them because it was the right mix of legal and finance and tech. But we really pull in the engineers that sit on Monadical as needed to vet the deals. It really depends on the company. It might be a computer vision company. It might be more of a language company. It might be some sort of vertical software where one of our developers worked in that industry for many years and has expertise. So really just be able to draw those resources whenever we want. It's quite powerful, and it does. This is the edge Max was talking about.
Yeah, and just for context here, before we started this, we went out and we just talked to tons of startup founders. We went to Collision. I think we talked to 200 different founders that week, and just asked them, what's your experience with venture capital? What do you like? What do you not like? How does it compare here to the United States? And a typical VC experience from this perspective of founder in Canada is they're slow, they're risk averse, they don't understand the technology, they want to figure out what values to plug into their spreadsheet. They're not able to understand the big picture, strategic kind of positioning of the business, and they like waffle, right? Oh, well, yeah, okay, we're kind of interested. Okay, and then 2 weeks later, 3 weeks later, 2 weeks, 3 weeks, when you're an early stage founder, is too much time, right? You need to know, you need to be able to act, and so one of the biggest kind of things that we do differently from other investors at early stage is we talk to them, ask good technical questions, and then decide right away. We tell them very, very quickly, okay, yeah, we're in, or we think we're in, but we have these reservations, or we're not going to invest at this stage, and here's why. And that feedback is so invaluable to early stage founders. And being able to like move forward, right, with the knowledge of, okay, these guys don't want to invest in us because X is that's really the knowledge that you need to be able to be agile when you're just starting out.
Yeah, and that's what differentiates us. And most of the deals we've invested in have been oversubscribed, and we've pretty much won all of them or got the allocation we wanted. So let's talk about deal flow. As a VC, your returns are only as good as the companies you see and then invest in. So they come from three sources. I would say the first two here, and they're definitely in the order of importance. The first is that founders love us, and it's what Max talked about. They're okay with me. They love Max. He sits in the room. He could riff with them. He brainstorms with them. He's a former founder. They get it. We're often speaking to them. And the CEO's like, okay, we'll get back to you guys if there's place. The CTO's like, no, we need these guys in. I want them on my cap table. So the founders who we've already invested in, they're in the ecosystem, a few in Toronto, a few in New York. They send us interesting founders all the time. It may not lead to anything, but it's an excellent source of, here's an awesome founder, building in stealth, great CV. We've dealt with him. We know he can ship technology quick and efficient, and he can talk and knows how to sell. Perfect. We want to meet him. Thank you for the referral. That's honestly the best deals we see. The others are from other VCs in our network. We have a lot of VCs, both in the US and Canada, who send us deals. Why? We're at the pre-seed and seed stage. A lot of that is collaborative. There's going to be multiple investors in the round. The other VCs know that, and they say, hey, if we send it to DevCap, we're going to get a free technical assessment. They know we go through the tech stack. They know we talk technical with the CTO, and then we're going to give them that feedback. Most VCs end up paying outside firms to do that technical diligence. When they send us a deal, they know we're going to do it for free, do it well, and then send them the feedback. For us, it's a great source of pre-vetted, at least on the business side, and then for them, it's a great technical assessment. Last is community building, always important if you're a VC. It is a people person that will never change. One thing we're highlighting here is we launched something called Founders Poker Montreal. We host it monthly with a couple other VCs. We get 36 founders together every single month. We have a waiting list and a mailing list of 500 founders. It's been a really good event. And that is the type of stuff you have to do to build up your reputation and track record. It's stay active, stay in the community, and be seen as a good source of connections and value. So most investment rounds, well, I know we're harping on this, but this is what makes the difference. They're competitive deals, and this is how you have to differentiate yourself. These are a couple quotes. I won't belabor it too much. This is a Montreal company. Mark's the CEO. We just closed a deal with them in August. It's a marketing tech, AI-powered marketing tech, of course. I'll just read the bolded part. Their conversations with us on AI were the deepest we had, and their personal experience in the field allowed them to guide us from day one. He's been sending us other founders in his network as well. Here's Kevin. He's the Chief Innovation Officer for a mining company. Richard, when you were talking earlier, I think they would be excellent in the Canadian public markets. Their CEO is at PDAC this week. We were talking to them. He said Max operates at a true God mode level of AI understanding. I had to read that because Max would be too embarrassed to read that about himself. It's a long quote. We love it. It's very dev. Max is a dev. We put it on the website. So that just highlights, the relationships we have. You need to have those relationships with the founders. They text me all the time. I ask them, please not before 8 on weekends. Happens anyway. And that's it. We built out a portfolio right now. It's 10 investments. The goal is to expand to 20 in the next year and a half. As mentioned, we're global and location agnostic. In Canada, if you take funds from BDC or the other big government-backed institutions, they put you in a box. You have to do something very strict. You can only do maybe Quebec, you can only do Ontario, or even Canada. We said we don't want that. We want to go after the highest ROIs possible. They might be in the US, they might be in Canada. We've done deals in both. We've done a deal in the UK. We don't care as long as it's an amazing team in a great space at the right price.
Yeah, I can't tell you how many VCs in Canada I've talked to who talk to me about how they have to work within a certain bound of valuation for certain companies that look a certain way because they need to justify them to public markets people who don't understand VC. It's a big problem, and the vast majority of VCs in Canada are backed by these LPs that put these artificial restrictions on their activities.
You want to handle this one?
Yeah. All right. So in 2024, it was our first year making investments. We made 5 investments. 3 of them have already had up rounds, which puts us pretty firmly into the top 5 or 10%.
We weren't sure if it's good because we're on the newer side of venture, and we go around talking to other VCs. Yeah, how you doing? Well, 24. It's been a year so far. 3 of the 5 of it up rounds. Like, wow, that's really good. Oh, maybe we're onto something here. Let's keep going.
And 2 of them are just absolutely killing it.
Yeah, this is the 10. 2 of them are Toronto-based. You can see, the presentation will be available later, so let's just keep going. Max will talk about 2 of them that are doing exceptionally well in a bit more detail.
Yeah, so EdgeScale, we kind of got squeezed into the round because of a personal connection. We talked to the founders. They were kind of already closing the round. They had kind of closed it already a couple days before. We talked to them about what they were building, asked a bunch of good questions. They said, hey, you're in our network. We really like the way that you're asking us about what we're building. Really interesting. But we would need to close basically the day after tomorrow. And we said, yeah, sure, we'll do it. So we made it happen.
Before anyone thinks we're cowboys, the co-founder here was the former CEO of Nokia for a decade and chairman of Alcatel-Lucent, and they emerged from stealth with a massive deal, multiple year deal from Palantir. So there was a lot of safety here.
Yeah. I almost thought it was too good to be true that they were going to squeeze us in on this round. It was such a no-brainer. And I was like, what are they doing with these podunk guys from Montreal? But it was real. We got in. They've already raised an up round at 2.5x the valuation that we went in, and they gave us allocation on the.
They gave us a great allocation on the new round. And this is a Toronto-based company.
Yeah. So this is Mike Kim's company. We got in pretty early. We've supported him a lot. He was coming out of an accelerator, Antler. he ended up having to split ways with his technical founder. And so I was able to help them figure out a hiring process to bring in technical leadership. They are just crushing it on the business side. Mike Kim is really knows how to run a company. They've already raised an up round, and then they're probably going to raise another up round in a few months, approaching 2 million in ARR, looking at a Series A probably. Yeah, and that's going to be another multiple on our
Yeah, they're
spreadsheet.
they're crushing it. So what are we doing, DevCap? That was an overview of what we've done. What is the goal? Our North Star vision is to have a liquidity event within 3 years. We think there's room, although I should talk to Raj. I think there's an appetite for a product like this where the do-it-yourselfers and the investment advisors can give their clients exposure to early stage AI. Their clients come to them and said, I want exposure to AI. Cool, what can you buy for me? Oh, there's NVIDIA and Microsoft. Well, they're $4 trillion. You're not going to get the 10x. They say, well, I want to buy something at 10 million that might be 100x. What can you do for me? I say, well, nothing. If this trades publicly, it's a way for public investors to get access to these companies. We're doing these deals at 10 million with the goal of them eventually becoming unicorns. So there's 3 that already exist. Stat Capital trades in Canada, Destiny 100 and Suro in the US. The difference is they're buying secondaries and it's very late stage, things like SpaceX and OpenAI. So they're buying from early VCs who got in at the Series A or the seed and are now exiting at the OpenAI $700 billion valuation. So what we're doing is quite different. Everything we buy is primary, meaning deals directly with the companies, and we're trying to add value at the earliest stages. The other cool thing with our structure is we're effectively an internalized management structure. There is no GP. We are the GP. So the real long-term plan, I'll go to the next slide, is to be something like a Brookfield Asset Management or KKR. I know that's a big vision, but we're trying to think big here. So how would that work? We would have on-balance sheet assets. That's what we're doing today, direct investments, early stage startups. We're developing that reputation. We would also at that point, post being public, we could then do classic Series A and Series B funds under a 2 and 20 model. We are the GP. We will get the LPs, which are those big institutions. They demand a 5 or 7 year track record anyway. So the way we're doing it is trying to speed run that. And we would be the publicly traded VC Corp. As mentioned, there's BAM, there's KKR, there's Apollo, there's Blackstone. There really is no VC equivalent, and I do think there is that appetite for it. So right now we're doing our second financing. We did the first 2 years ago. Mr. Caldwell and Urbana were big supporters at 10 cents. The new one's at 15 cents. As Mr. Caldwell said, he told us he'd be there to support us, and he was extremely quickly. Appreciate that. We're not in a hurry to get to the high side of it. We've closed out some. We'll do somewhere in that range. The only thing is, as we talked about, Mycroft is doing so well. It's a bit of threading the needle here on how you price it. We came to market with this 15-cent deal, a 50% up round from the 10 cent, and we thought it made a lot of sense. There's a fair amount of value, but not giving away too much to new investors. Now we have this company, which is a 14% weight in our portfolio, that is likely to have a very large markup in the coming months. So our philosophy here is let's close out what we have. We've done a couple million already. We have another million committed. But I don't want to push too hard because we can always come back later in the year at a higher price if needed. So it's a bit of a balancing act, but we're trying to thread the needle on it. Okay, I don't know if we saved enough time, but I know we're going to get questions on the SaaS apocalypse. It's been the subject of the public markets for the year. I'll hand it over to Max. We're going to try to give you guys, if Liz will permit us to go 2 minutes over, a rough framework of how to think about AI companies and what the disruption means for classic SaaS.
Yeah, so I think if I were looking at the SaaS apocalypse, my first thought is don't panic. I think it's not like AI is going to come.
Explain what the SaaS apocalypse is, just in case.
Oh, sure. Yeah. Well, basically, major SaaS companies, software as a service companies, have been just getting hammered in public markets. Basically, every time Anthropic announces anything related to a business, all of the SaaS companies in that sector tank by 20-40% instantly that day. And so I think there's a lot of just general feeling of doom around software businesses. And I think, the theme of today's disruption, there is nothing being disrupted more violently right now than software because language models are exceptional at generating software. I can prototype something today that would have taken me probably 3 months to do. It's a like a 30x speed up right now for prototyping, probably like a 2 to 3x speed up for more normal kind of business operations in the software space. And obviously that's growing over time. Like it was less than that last year. And so when the unit economics change extremely quickly like this, it disrupts every software business, right? So what does that mean? Well, I want to say that what it really means is that things will change, right? It doesn't mean that every existing software business is going to fail, but it does mean that there will be opportunities both for existing businesses to grow and expand into other verticals, or to bundle products, or for new upstarts to come in and disrupt the existing old guard. So if you look at a business and their main competitive advantage is that they have been building this software for a really long time, and it's really annoying to build a lot of software and it would be expensive to reproduce, that's probably the most vulnerable kind of company, right? On the other hand, there are lots of other ways that businesses can have lasting advantages in software. You can have established customers. You can just go to the next slide, I think.
Sure. This is the stuff you want to look for in the business to buy.
So proprietary data in the age of AI is probably the most important thing, really. If you're using language models and interacting with them, those interactions are generating knowledge that models can be trained on, right? And so if you're a business with tons and tons and tons of user interactions, and you recognize right now that these are the things that we want to capture and harvest and turn into AI products, you're going to do really well. If you're operating in an industry that's highly regulated, AI is not going to remove those regulations. If you have a strong network effects are very difficult to overcome. I don't think that language models are changing the fact that network effects exist. And then technology that's deeply integrated into anything physical or logistical. I think Amazon was getting. I saw Amazon dropping.
So Amazon got hit. DDA was talking about agentic commerce, which is when an AI agent will go in ChatGPT and just complete the acquisition, the purchase for you. And Amazon was going down earlier this month or last month on this news, and me and Max were just laughing because it's like you don't go to Amazon necessarily for the cheap toothbrush or to sell your cheap toothbrush. You go there because they're going to handle all the logistics for you. So it's not like the agent is going to go to your house in 40 minutes away from downtown and just pick up that tiny item. Amazon's providing a ton of value around that, and the fact that it was selling off to us was just a bit silly.
Yeah. Plus, they run a lot of the underlying infrastructure that these models are built on, right?
And then just final notes.
Just that I guess I really look at companies and ask myself, are they going to move? Like, are they dynamic? Are they going to adapt? Because when you have these like violent changes in industry, it's the incumbents that are the most agile that are able to leverage their existing advantage to grow, right? And it's the incumbents that are slow and set in their ways that tend to get devoured by upstarts. And so for me, the biggest thing that I'm looking at right now at this stage in the curve is this company changing quickly? Do they have a vision? Do they understand where things are going in their sector? And are they planning for that? Are they moving right now? Are they building today?
Yeah, it's always a classic trade-off between upstarts with no distribution and established companies with power, but they move slow because of bureaucracy. So that's it for us. Thank you. We're happy to take questions.
Actually, I'm coming to you for investment advice. I'm looking at Thomson Reuters, for example. A lot of their money comes from the legal business and the proprietary information they have. So you're saying AI, really smart guys running that. They always were able to move strategically into the right next thing. What are your thoughts on them right now? Stock's been hammered a good chunk here.
Thanks, Anthropic.
Is it a buying opportunity or a trap? What's your opinion?
I mean, I'm not a public markets investor, so with the caveat that I don't understand why, Some of the tech companies trade at like 80x multiple of their earnings, and others trade at 20. But I would say more holistically, I don't see Thomas Reuters as one of these businesses that's like stodgy and slow and is going to get outmaneuvered. They seem like they have a pretty strong understanding of the way that firms are using AI. They're trying to maneuver to use the fact that they have this huge data advantage to build products for lawyers to use. So, I mean, I could, they're one of these firms that I could see very easily winning from the fact that they have a good market position and are fast adapters. It doesn't mean that they will, but I do see them as one of these firms that seems like they are adapting quickly.
So the one thing I'll add is, LexisNexis, things like that, incredibly sticky. What I do think will happen is the feedback is always great but expensive to use their products. I think this will keep a lid on their pricing power. They could flatline it. It's going to be hard to push through 3-4% price increases because an incumbent built this product that's AI native. It's great. The software works, but you would have to price that extremely cheap for someone to switch. So, that will be a lid on what they could do, but the rest of it, bundling. The flip side of that is they have huge buyers already. It is now so easy to build tech. That's true for the incumbents like Thomson Reuters, so they can build something, a new vertical, very close, adjacent, tack it on and bundle the products together. I think that's an edge to them.
If I could just clarify, like I'm a 3-year-old trying to understand it. We've got software that's running the applications on my hardware, my computer. And there's always been this idea of AI, which is the notion that it's going to have a mind of its own, like a human being's brain. It's no longer just software, coded stuff. And this was always like the stuff when we were kids watching, Twilight Zone and all that kind of stuff, Star Trek kind of stuff. So my question for you is this. Where do you think it's going to go like 5 years from now, 6 years from now? Like where?
Do you have an hour?
Like
Crystal
no,
ball.
but it's
No, we
notion
talk about this
that
a lot.
that the coded stuff, like the machine has a brain. It's like HAL out of 2001 movie, right? So why doesn't it crush the software companies? Like, I don't understand why it doesn't. They're selling stodgy proprietary stuff that's going to become obsolete 3 minutes from now because you've got this brainiac AI. Why isn't it even more crushed? Why isn't it more of a terror?
Well, I mean, I'm an AI, I guess. I'm an intelligence, and I use software, right? So it's not like a bigger brain is going to change the fact that you a neural network is never going to be more efficient at looking up data than a SQL database, right? It's never going to be the case, right? It's always going to be more efficient. People have spent years and years and years in computer science optimizing these algorithms, right? Software is not going to go away. So it's not like we're going to throw software away and only interact with the brain directly, right? So there will be software. It's just that the cost of producing the software is plummeting, right? So you're going to have software layered on software and layered on software. In the 80s, if I was a developer at Nintendo making a little game, right, most of my job was figuring out how I was going to pack the level design into a kilobyte of memory, right, and thinking really carefully about how to do this super efficiently. As a software developer today, that's not even a question, right? I have a compiler that compiles to an intermediate representation, which blah blah blah, and I've got that kilobyte of memory is like a tiny drop in the ocean compared to the resources that I have on my machine, right? So there's been this exponential curve of which has led to abstractions on abstractions on abstractions on abstractions, right? The things that were valuable in the 80s still exist, right? There are still people that write assembly, right? Write this little low-level code, but it's a niche thing, right? It's not where most of the value lies. And so most of the people who spend their time engineering are going to be shifting towards doing whatever the new layer, wherever the expanding surface is, right, of the balloon. The idea that it's going to replace people, I'm pretty skeptical of. I mean, we've got self-driving cars have been on the border for almost a decade now, right? That last mile is really difficult, but it's tough to say, right? Like there are cases where if you can perfectly measure the outcome that you're looking for, like in games, for example, you can perfectly simulate the game and measure the outcome. Models tend to way outstrip people very quickly, right? Like Go, chess, whatever. Humans are all gone. But in the real world, where it's messy and it's tough to measure exactly what good is, you can look at something and be like, no, that's wrong. You shouldn't have crashed the car. But like, how do you define what good driving looks like? It's a wishy-washy thing. In those cases, the returns tend to be kind of logarithmic, right? It's like it costs more and more to get the next incremental return. So I don't think that you're going to see like HAL take over and obviate the need for people. But it's also difficult to predict what are the things that we're going to figure out how to measure perfectly, right? And what are the things that are going to remain very difficult for language models. And often they're the things that language models are very good at. Also, is very surprising sometimes. I saw a talk recently showing how a lot of these vision models that can create photorealistic photos that I'm sure you've all used in your presentations, right? If you ask one of these models, if you draw a line and then draw a squiggle line through it and ask it how many points of intersection are there, they get the answer wrong. All of them, all of the top models, right? Which is shocking. And so you just get these like extreme mismatches of expectation between like the things. There are ways in which models are so extremely superhuman, right? And you interact with them and it blows your mind. And then there are these ways in which they utterly fail, and it's like difficult to predict what those things are. And so really, I think you're going to see a growing kind of cooperation between these two approaches to intelligence, right? Where we're able to bring the kind of quick learning and smooth curve, right? And the language models are extremely superhuman in other things. Anyway, sorry.
That's why I partnered with Max.
Just for my understanding, like these models, there's training stage, which I think most of the market share is now there. And then the inference stage, where the training stage, you give the model 1 million books to read, and the inference stage is, okay, come up with a conclusion or an answer we haven't developed. What kind of companies are you going after? Still more on the training side or more on the inference side?
We look everywhere. I'd say, generally speaking, on the model training, like these lab type companies, we can't really afford them. Like
Those are like $1 billion training runs.
yeah,
Those are $10 billion plus companies.
those are like a little bit outside of our like the pre-seed round for a company like Anthropic. I mean, it was like Sam Bankman-Fried came in and dumped hundreds of millions into their first round, right? So
Small startup that's doing that now. You spoke to
there are, but those are really, really high risk, high upside bets that I don't think are appropriate for a company that has like 10.
So we've seen some. So we were just at a Mila demo day. If you guys don't know, Mila is the Research Institute of Quebec. Amazing researchers, less good on go-to-market. They're trying to fix that. And we see amazing tech out of there, but it is hard because you got to find a founder who's scientific, this amazing breakthrough, but then can actually get into a room and talk to somebody and sell. That's the other half of the equation. They often don't go in the same brain. Often you find a good co-founding team. So we have done more, what you call the inference layer. We've also done stuff, the rest of the stack, something called the memory layer, where if you talk to an LLM and let's say you're asking it to set up a custom diet plan for you, you want it to remember the next day that you're allergic to almonds. So that's the memory layer that does that. You don't want the LLM provider like OpenAI to lock you into them. So you want a third-party agnostic memory layer if you're building a business around it. So we invested in a company like that. It's called Backboard. It's based in Ottawa. Amazing repeat founder. So that's sort of in the AI stack, less in inference, but it was an affordable valuation. We actually thought it was a great deal. The founder's amazing, but it's in our wheelhouse.
Last question. Am I the last question? Okay. Hi, thank you. I'd like to know, I am a person with a disability, okay, and I work a lot in that field. How is it being addressed within all of the websites and everything, which has to be up to code? Do you think about that market, which is rising exponentially, like 25% right now is part of that market?
Yeah, in fact, we built this really cool prototype for somebody who survived throat cancer and had to have a part of her larynx removed, and we built a custom model that was trained on her like phonemes, and we were able to have her talk into the microphone, and her like friends can understand her, but somebody that she meets in a normal situation have a really hard time understanding what she's saying. We were able to get her to talk into a microphone, have that do a speech to text, and then text back to speech in her voice. And so she was able to speak in, with a few seconds delay, which of course will get better over time. But that was a proof of concept, just to show that the technology is possible. I think we're going to see a lot more of that kind of stuff in the coming years, for sure.
Sure. Okay, thanks everybody.